Welcome, everybody, to a live session here of the Dr. Stoxx Trading Room, brought to you by Discord. And if you're interested in joining us and trading with me, watching everything that I trade, my entry price, stop price, target price, reasons for the trade, technical charts, and all the rest, along with trader training every afternoon, then go over to drstoxx.com, that's drstoxx.com, and click on the live trading room button, and you'll be able to join us here. So I'm here every day from about 8:30 in the morning until 4:30, 5 o'clock in the afternoon. Take a little bit of a break in the middle, but we do a lot of trading in the morning, and in the afternoon a little bit of trading and more training as I try to help folks get a good handle on the market, what's moving, what's not, and some strategic approaches as well. All right, so today's a Friday. It is the 11th of October, as I said, and we're actually winding down a pretty decent week for the stock market. The S&P is right up at all-time highs. The NASDAQ is bumping up on multi-week highs. The small cap index, which has been lagging, is bouncing off the lows. And a lot of stocks that have been really, really miserable lately are very, very happy today. This is unexpected because we just weathered through 2 days ago a hotter than expected CPI number. Today it was a hotter than expected PPI number, and both those things should have made the market a little bit skittish. The fact that it's not is a very good sign, very bullish, and bears are in trouble. Yet again, they've been in trouble pretty much all year. It's been a very good year, about 25%. Return for the S&P 500 year to date, and that's an excellent year, well above average. All right, so going to do a few things with you first. Want to talk a little bit about my market bias trading system. I've been alluding to it here in the room, posted it on StockTwits, and to do that, I'm going to move Discord room off to the side, and we'll get over to our charts. And let's look at a couple. The VST was one that was just mentioned in our room by one of our members. And it's a great illustration of this trading system in action. So it's very simple. And I'm just going to give you the bare bones outline of it. There are other pieces to it. It's very similar, if you're familiar with my book, Trend Trading for a Living, very similar to the pullback setup, both bearish and bullish. And I sometimes call that my bread and butter system because it's probably the most commonly used trading strategy that I have. And this is very similar to it. So it's not quite the same thing. And there are, as I said, other bits and pieces. But here's what you're looking for. You put on top of your trading views chart this indicator right here. It's called a market bias indicator. And if you go to indicators and go to search bar and type in market bias, you'll see this one. It gives you red and green signals when the market's in a downtrend. In fact, the VST has not been in a downtrend for a long time. When the market's in a downtrend, it turns red. When it's in an uptrend, it turns green, and you get light greens and dark green for weak and strong uptrends. So here's the strategy. When it is in a green mode, whether light or dark, doesn't really matter, you buy the dips in stochastics below the 20 level. And the vice versa on the bearish side, when it's a red market bias and it gets up above, the stochastics gets up above 80, that would be a time to go short. And you can see that every time it does dip down to below 20, it usually precipitates a pretty good move. Here's another one, pretty good move to the upside. Now this one came a little early, so there are other factors that you're going to have to look at if you want to avoid getting stopped out of this one. You probably would have been. Here's one right here that gave us a little bit of an upside, and here's one here that gave us just a couple of days of upside, and so there's a good one, there's a good one, there's a good one. So you're probably going to hit about a 60% win rate just with those two factors. You got to work out position management. You've got to look at the angle and the ratio of your moving averages. You can throw on the LRC, which I have on here, the linear regression channel, to give you some trend and distance from the mean data as well. But that's the system. Someone was asking about it, and I thought I would explain it. Now, I frankly don't take signals from those two bits, right? So I have my own pullback system, which is, I think, a little more sophisticated, and I use that primarily to determine entries and exits. And even then, I'm not a mechanical trader, so there are other factors that we look at. We look a lot at fundamentals. We look a lot at analyst reports on companies. We look at what IBD is moving up and down their top 50 list. And we use that realm of data as well, which has nothing to do with the price chart. But it is the price chart that only pays us, right? So we have to make sure we've got the technical support with relative strength, with not too near resistance, right? Pushing off support, things like that. When we've got that, and the other things as well, we've got a good, healthy trade. All right. Enough about that. Let me talk a little bit about the junk bond indicator. So when I was learning how to trade way back when, and was sitting under the tutelage of a number of names, William O'Neill was one of them. There was a guy who used to do candlestick charting named Steve Nissan. I sat under his teaching for a while, and there was another guy whose name I won't give you because he was later indicted for fraud. But I did learn a number of technical tricks from him, and there was a guy who was actually a student of not William Graham, of Warren Buffett, who taught me this indicator. This is a junk bond indicator. So follow junk bonds. When junk bonds are in rally mode, and they are right here, just about anything and everything is open for buying in the market. Because if there's an appetite for junk, there's an appetite for anything, right? These are corporate bonds for the most part that are high risk. They high yield as well, but high risk. So if people are willing to take a longer term view with the junk bonds and take on that extra risk, they have a healthy confidence in the economy, right? It's just common sense. So keep an eye on junk bonds. They're actually printing today a very nice looking, if we can drill in on it, nice looking 3-bar reversal. Here's your red bar, here's your hammer candle in the middle, and here's the big green stick on very good volume, better than the day before. The stochastics are coming out from deep, deep, deep oversold condition. We're down here in the pink zone of the uptrending LRC, and we're pushing off the 50-period moving average, and our moving averages are stacked. The 21 above the 50, 50 above the 200. It's just about as good as it gets. The only thing I don't like is we do have some distribution days. These tall red candles means more shares coming out than going in. But this push today off the bottom on good volume may well bring that trend to an end. And now we start to see some accumulation. And certainly just from a pure price perspective, we are moving higher. That's a good thing for stocks that are not, or that haven't been in favor, right? So with that in mind, we can go over to some of the lagging sectors, and I made a list here of some of them. We can go to high beta names. We can go to, and high beta names usually are ones that are sort of lagging the rest of the market. We can go to the list of meme stocks. We can go to stocks that have been underperforming the market. We can go to small caps. We can go to biotechs, and on and on. Riskier names, right? So I've got some here. We'll just shoot through these really quickly. And for these trades, you're not going to be using the market bias, because a lot of times the market bias is going to go bearish when in fact some of your best trades come from that time in the market, right? If there is indeed outflow from big blue chip stocks, from safe havens, from staples, from, we've seen Coca-Cola fall, we've seen Walmart have some trouble. If money's coming out of those kinds of names, where is it going to go? Well, it's clearly not going into 20-year bonds, because they're down at 52-week lows. Where is it going? Well, some of it's going into junk bonds, but it's also flowing into names like this Bitcoin play, right? This is a Bitcoin exchange, COIN. and having a really nice day. It's up 8% today after a nasty looking fall. This has been in a long-term downtrend. And I did want to point out this pattern, which you're going to see on pretty much all the Bitcoin plays, a potential. And it's not very well formed, I have to say, because you don't want to see the neckline slanting lower like that so strongly. But there is some potential here that this is bottoming out, beginning to print a bottom. We at least have a higher low. And you know my mantra, if I can put where's my path here, right? A typical downtrend is a series of lower highs, lower lows, lower highs, lower lows. And when does it come to an end? It comes to an end when we print a higher low, and then we print a breakout above the most recent pivot high. That's your trend ending pattern. Doesn't always end the trend, but more often than not. In fact, I would have to say this. When you see this pattern, it doesn't mean the trend is coming to an end. But when the trend comes to an end, you're going to see this pattern. Does that make sense? That's a perfectly true statement. I used to teach philosophy. I taught it for 17 years, and I would have to say that my logic on that is watertight. So that's what we're starting to see here. We've got the higher low. We just need to get above 192 and change. And that's still quite a ways up from current price, so it's got some work to do. But I like what it's doing today. Very good volume, big green stick. I wouldn't kick anybody in the pants if they bought a starter position here in COIN. It has been lagging. Bitcoin itself has been lagging. But a company like MicroStrategy, which is a pure Bitcoin play, is doing really, really well. So there has to be some catch up here in some of these other names. Biotechs, these are the experimental biotechs, right? Most of the companies in LABU, not all of them, but most of them don't have earnings yet. They're all in the pipeline. And if this group can rally hard, anything can rally hard, right? So we're seeing this trend. Money coming out of blue chip tech stocks, some of them, not all of them, and flowing into junk bonds and beaten down names and speculative names. And this is very good. This is good because it makes everything a little bit safer if there's an appetite for risk, and it makes trading a lot more fun because these are the names that really make us big bank in a short period of time. So a big 3-bar reversal today, right? Not quite a classic one, but if I could remove the market bias here, we'll see it better. So we've got the red bar, we've got almost a piercing candle reversal bar in the middle, and a big green stick today. Out of the pink zone of an uptrending LRC, it doesn't get any better than that. Volume could be a little stronger today. That's one thing that's a little lagging. And it's been distributing lately like the junk bonds. So we have to really think this is having potential, but not quite showing us just yet that it's in rally mode. We're long LABU with a wheel play. We're going to talk about that, rolling that out to next week. I've got a couple of ideas on that. And it's a very good way of profiting from the market. Doesn't have to go up. It can just go sideways or even down a little bit. And because of the volatility of this index, we can put our strike price well below current price and take a lot of the risk out of the trade. Mars, another Bitcoin name, and you'll see the same sort of pattern there. Donald J. Trump has his own company, and I'm not exactly sure what they do, social media, I think. And it has more than doubled in the last 2 weeks. Can you imagine that? It has more than doubled in just over 2 weeks of time. That is an appetite for risk because this guy has no income whatsoever, and it's losing money right and left. And if the market can do this for a company like this, it can do miracles for a whole bunch of other stuff. GCT has been on my list for a while. It's a great company, low valuations, high growth, and the market has been totally out of favor with it for a while, and I don't know why. But reversal today off the 21-period moving average, oversold stochastics. Yes, we're in a downtrend, but we do have a recent rally, and that's a big one, right? That's from 16 to 29, big jump. Little bit of a fib retracement into the rising 21 and a big green stick today looks like a little better volume too than yesterday. That's a buy signal right there for a lotto trade. And this company was on the IBD top 50 list for a long time. Fell out of favor, and I don't know why. And here it is trying to make a comeback. Unity, same story. Been in a downtrend for a long time, now starting to make a real comeback. If you look at the weekly chart, some of these actually look a lot better on the weekly chart. You're going to see it's down, 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 way, way down from where it used to be. And now it's doing this nice rounded bottom and a little bit of a bull flag on the weekly chart, having hit the 50 or the midline of the LRC. And if you look at that pattern we just showed you, the rounded bottom, here's your handle, right? So you've got a cup and handle bottom forming. It's got to get up above 2330. That's not too far away. And then from there, that's a deep handle, like 14 to 23, a 9-point handle. So 32 would be your target price. That's a nice one. Upstart, similar story, but it's in big breakout mode today. HIBL is another fund you can keep an eye on. It is the high beta bull fund leveraged at 3x for the S&P 500. So these are the names that are a little more dangerous to trade, right? They're more volatile up and down. If they're happy today, and they are, then we can be happy on the market. In fact, I think just buying HIBL is going to expose you to a lot of great companies. If they're in the S&P 500, they've got some good stuff going for them. But if they're volatile, high beta, they probably are down on performance, lagging. So if the market is starting to flow into names like this, there's a good way of trading it. ASTS has been on my watch list for a while. It's a absolutely zero income kind of company, but it's lots of potential. Aerospace, satellite technology, and so on. Breakout today finally. Actually, I'm not sure that is a breakout. Yeah, it's not. But we're getting close. We're getting close to breaking out of this long pullback. AI, haven't looked at this one for a long time. It's a meme stock. It used to have a heavy short float. It would get, pumped and dumped. But look, it is in breakout mode. And if we look at, or almost there, if we look at the weekly chart, you're going to see that this is a long time downtrend, equal lows, not quite the higher low that I would like to see, but it's like a falling wedge banging up again on the ceiling, and the more you knock on that door, the more likely it is to open. Just a few more here. DraftKings has broken out and is flagging a little bit. ARK Invest is always a good place to go for those kind of beaten down names, because they often are disruptor companies that are more about future earnings potential, not what they're doing for me now, what they will be doing for me in the future. And if they're happy, the market's happy. Wayfair is another example of this. I think they lost $1 billion last year and $1 billion this year, something like that. Anyway, big crunch time. But look at this pattern, right? Here's your left shoulder. Here's your big rounded bottom head, and right shoulder is forming, and all it has to do is get up above 58 or so, and it's good to go. Oh, I want to introduce you to this new fund, and it comes from a friend of mine. So I know a guy he was a hedge fund manager for a long time, and then he kind of sold out his partnership, and he started opening up funds. You'll recognize his fingerprint on like FNGU and BULZ, and this is a new one he's opening up for FANGs. There are only 15 stocks in this group, and they're all the names that you'd be familiar with, right? AMD and NVIDIA, Apple, Amazon. He's got Micron in there, which makes me interested because I'm interested in Micron. And the way he manages this is that he doesn't just buy the shares, he does covered calls. So this actually pays out, you can see a monthly dividend of over $1 per share. Turns out to be about 25%. Now, why is that a good thing? Well, in a volatile market, which we are in now because the VIX is up over 20, I'm not sure where it is today actually, but it's been over 20 this week. In a volatile market, when you take a more conservative approach like covered calls, you will do better than those who are just buying shares without any protection. So if you look at Fingu, right, this is the 3X bull version of the FANG index. Had an amazing year, 150% over the last 12 months. But if you look at the last quarter, they've lost about 11%. 11% because money's coming out of the FANGs. This one has not lost, right? And I don't think it's up by much, but in the last quarter, it's made money because of those dividends, right? They've managed to, and they're not leveraged either. So, all right, just wanted to introduce you to that. Somebody was asking about Mobility, another one that is getting a good pump today. Is this the bottom? I don't know, but it does look kind of bottom-ishy, and we are seeing this, this pattern here, right? It's kind of like that. Here's your higher, here's your stop. Here's your higher low. We just need to take out that pivot high, and the trend comes to an end. It does also look a little bit head and shoulder-ish like, and then VST. All right. So I think that covers everything I wanted to cover. Let me just double check. Junk bonds, the FANG fund. Oh, stop loss types. Let me tell you a little bit about that. And then I'm going to shut off the video and we'll jump over to my trading platform and we'll do our wheel and diagonal debit spread rollouts. And I've got one new trade for you today. And we're going to be closing out one. We're going to replace it with a new one. And I'm going to be, well, I have to wait and see, kind of see where the prices are. But I might be shifting our position in AMD as well. Okay, stop loss type. So there are two main types. There is a stop market order and a stop limit order. With a stop limit order, you have to set two prices. Where's my camera? Two. I can't get my fingers in the camera. There we go. Two prices. With a stop limit order, you have to set the price at which the stop will execute, and then you have to set the price that you want to get out at. And those aren't always the same prices. So, for example, if the stock is trading at 100, you might set your stop limit order at 98 to trigger. But if your stop limit price itself is 98 and change, it's not going to execute at 98. It will only execute once it hits the actual limit price. So I don't really understand the logic behind having those two prices, but that's just how it works. I guess some people say they want the stop loss to be active if it gets down to 98, but they don't want to get out of the trade until it goes down to 97.50, something like that. I think that's the reasoning behind the limit order. Now, here's the problem with limit orders. In a fast falling stock, it could flow right past your limit order, and if you didn't get filled, on the way down, you're out of luck. And sometimes you can get stuck in a falling market and you can't get out of it because it went right through your limit order. There's no guarantee that you will get executed or filled at your limit price. So your better bet is the market order, stop market order. You put in a single price, the price that you want to get out at if the stock goes down to that level. If you're long, of course, it'd be the opposite if you're short. And you will get out of that trade once the market trades at that price, but you may not get out at that price. That's the drawback with a market order, but you will get out. You will definitely get out. And so as long as it's not a super crowded trade, you usually get out within a few pennies of the actual price itself. I recommend doing stop market orders, and I don't recommend keeping your stop losses on during aftermarket hours because you just get very thin trading and you get a lot of volatility, and a single bad, fat finger trade can just throw you out of the position, and then it's right back up to where it closed the next day. So don't do that. In fact, I have a friend who he doesn't even put on his stop orders until about 15 minutes after the bell. He waits for the first opening bell 9:30, and then he doesn't put them back on to about 9:45 because he doesn't want to get caught in that higher volatility right off the open. I don't do that. It gets a little too complicated. I like to keep things simple. All right, guys, I'm going to let you go. God bless everybody. I will produce this video, put it over on our YouTube channel, and then I'm going to come back on and we'll do our live rollouts together. God bless everybody. Have a great weekend, and we'll see you soon. Bye for now.